Hello everyone, I hope that you had an amazing day and lots of profitable trades in the market. If you have decided to search on Palantir and click on my video, then chances are you're wondering about whether it's a good entry point in the market right now and if the stock is a good addition to your portfolio. As we know, the job market over the past few years has seen a lot of ups and downs. Companies that were once considered as safe havens for those seeking employment have been reducing their workforce, and it has been a traumatizing experience for those concerned. The inflation, on the other hand, has been rapidly increasing and eating people saving away in economies that have previously been deflationary. So, when every source of uncertainty is about to melt away, we must use that opportunity to remember that we need to take a step back and to start working about our own financial independence. In order to secure our own financial future, we have to find the growth opportunities of tomorrow and seize the ones that can multiply our capital exponentially, increasing the money available for investment later. Essentially, we gotta find the golden goose, and for many, Palantir is exactly one of those stocks. Over the past few years, Palantir became so much more than just another tech stock collecting funding in exchange of promises, because in the meantime, it has become a major company playing the role of the canary down the coal mine, and it has enough clout and mystery around it to arouse the market's curiosity. It has succeedingly triggered people's tendency to follow trends, and is a company that people often view as the risk appetite indicator of the market alongside Tesla or Apple. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very interesting like tool that people can use. And this is also one of the reasons why I would always recommend to keep Palantir on your shortlist. In this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Now, before the video continues, I just want to take a moment to thank you for coming to my channel and hope that you will enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of companies that I cover. With that being said, I hope that you're going to enjoy my analysis of today, and let's get started. Palantir Technologies has been experiencing some significant price movements recently, first the bullish ones and now, increasingly, the downward pressure. The stock's price has seen a high of $23.09 and a low of $22.54. The movements from previous trading sessions show that the market is now having a lot of pressure pointing downward, that the expectation has been steadily building up over the past few weeks as the price action has a hard time moving up while the volume continues to dip. At the moment, Palantir is showing signs that it can maintain the ongoing trend and that it's in a pullback phase. The current market consensus is that the sell-off pressure has a combination of motives behind it, including the recent announcement that Palantir's growth slowed down in the traditional public sector over the course of 2023. There are also additional volatilities to be extracted as the S&P 500 will rebalance in June. Many saw those developments and used that opportunity to take profit from their current position with the expectation that the price action will first correct and then come back for a better price. The market reacted as a result and is still in the process of correcting the expectation and digesting the news. Previously, the resistance levels have always been identified at around $25 for the time being, which the stock has always struggled to surpass, with the support levels ranging a pretty big region between $20 and $23, providing a lot of stability to its price movements and a lot of choppiness to those who seek to short it. These levels serve as important markers for investors, especially the $25, because it's a very important psychological level. It indicates a potential area for price reversal or continuation. The short-term trends for Palantir stock appears to be moving sideways with a slight downward tendency, and this trend can be attributed to a decrease in both interest and volume from investors. While the overall trend remains bullish, the weakening momentum suggests that a potential shift in the market could be at play. Regarding the volume, the stock sees a trading volume that is usually around 20 to 35 million shares and peaks at around 60 to 70 million shares when there are significant announcements. And a 30-day average that used to be around, like 60 to 75 million shares, currently more around 35 million shares. So these data would suggest a decrease in both daily and average trading volume, indicating a potential loss of the investor's interest, at least in the short term. Palantir is currently experiencing a period of weakening momentum while maintaining a bullish trend overall, and the short-term price movements do indicate a sideways pattern with a slight downward tendency, influenced by the decreasing interest from investors, showcased by the diminishing volume. While the stock is facing resistance at around $25 and is trying to find support between 20 and 23, these levels may still fluctuate as the market conditions are always evolving. The recent action weakness is likely a combined result of profit-taking, bearish announcements, the lack of additional catalysts, and downgrades that some analysts are now displaying given the current market circumstances. So given all this, even if a lot of small things don't add up to a big thing, this has given enough reason to some traders to start taking profits out of their existing Palantir position. So for people who have been holding Palantir from like $8 all the way to 23, then it's only logical that they want to take some of this profit out and would expect some kind of significant market correction afterwards. Palantir has always gathered a lot of interest from retail investors ever since it went IPO. So the sentiment has been overwhelmingly reactive, whether in the good or bad sense, in the bullish and the bearish moments, with investors eager to capitalize on all the trends and momentums that Palantir has been able to find itself within, including the company's innovative data analytics technology on the way up and the wider tech sell-off, as well as questionable practices at Palantir on the way down. Obviously, Palantir's journey on the stock market has often been a pretty bumpy road with intermittent periods of bullish enthusiasm followed by prolonged sell-offs, dipping at one point below the $10 mark. One significant aspect of Palantir's price movement is the correlation between the fundamentals and the macroeconomic news cycles. So it's often observed that news surrounding the company is closely reflected in the price action, leading to a self-fulfilling prophecy scenario. When the stock is on the uptrend, the positive news tend to dominate headlines, fueling further investor optimism. During downturns, the negative news amplify the selling pressure, accelerating the downward trend. Currently, Palantir has been able to maintain its bullish trend in the medium and long term, albeit with diminishing marginal increase and occasional pullbacks over the short term. While the stock has shown a lot of resilience in the recent sessions, the pace of its ascent has definitely slowed, indicating a potential shift in investors' sentiment. The growing need for additional catalysts to sustain the bullish momentum is now in plain sight. One factor that can influence Palantir's future performance is its status as a large cap. The market capitalization has been steadily increasing for Palantir, and it's poised to solidify its position amongst the market leaders. The large cap status often brings increased institutional interest and a broader investor base, both of which can contribute to further upside potential. Now, despite a mostly bullish outlook, I want to say, It's essential to exercise caution, and a lot of it, especially in the short run. The price targets in the range of $30 to $35 seem plausible given Palantir's growth prospects and the market positioning, but they're by no means a guarantee. The market dynamics can still change rapidly, and the unforeseen events and market shifts can derail any bullish thesis. The factors from multiple aspects would suggest an overall bullish outlook to be maintained, supported by the recent performances and the ongoing narratives that Palantir seems to be profiting from. Investors, however, should remain vigilant and to monitor any sign of weakness or waning momentum, such as the one that we're seeing now. Now, with additional catalysts and continued market support, Palantir does have the potential to reach new highs and to cement its status as a leading player in the data analytics industry. When it comes to options, the available strike prices of put range from $22 to $24, while calls range from $21 to $23. The distribution would suggest a skew towards more calls options than the put options, but both contracts have significant demand and it's far less one-sided as things seem, or at least seem to be just a few weeks ago. Options can be very useful tools for traders. They can provide additional revenue streams for sellers and hedging opportunities against price volatilities, as well as increasing the speculative exposure to any particular stock to the buyers. Given the current options landscape for Palantir, a recommended approach may involve purchasing both calls and put options. Buying calls options allows investors to benefit from potential upside movements in the stock price, when purchasing put options volume protects against downsides. So this is called a straddle, and it's very advantageous when both options are out of the money. And by employing such a strategy with out-of-money options, we can position ourselves to profit regardless of the position in which Palantir stock ultimately moves. The flexibility is especially valuable in markets characterized by uncertainty and fluctuating sentiment. It's important to note that the options trading carries inherent risks and requires careful consideration of market dynamics and individual risk tolerance. The options can offer opportunities to enhance the returns and risk management tools. It can also entail any sort of potential significant losses, especially if the market conditions deviate from the expectations. Investing in a company like Palantir presents its own opportunities and challenges for investors seeking exposure in industries like data analytics and artificial intelligence. There are both massive upsides and downsides that can influence and should influence the decision making of any investors. One of the primary reasons people are drawn to Palantir is its potential to grow. Often positioned and considered by the market as one of the leading players in the data analytics sector, Palantir operates in a field with a lot of promises for the future economy. As businesses increasingly rely on data-driven insights to form decision-making and to drive innovation, companies like Palantir are very well positioned to capitalize on this new demand. With the expertise in handling and analyzing large quantity of data, Palantir stands to benefit from a growing demand for data-centric solutions across various industries. Also, Palantir's own financial stability is a very reassuring factor, because unlike many other tech startups that operate at a massive loss, Palantir has already established a revenue-generating business model. This reduces the likelihood of additional share dilution through frequent fundraising rounds, providing investors with a sense of stability and a confidence in the company's financial health. Additionally, Palantir has always demonstrated its ability to capitalize on popular trends to generate a significant increase in interest from the market, especially amongst the retail traders. Through strategic moves and partnerships, It enhanced its visibility and appeal, attracting attention from people who are looking to bet on the next hot thing. This ability to capture the market sentiment and to leverage it to its advantage also further underscores Palantir's potential for growth and success in the long run. However, we gotta be careful because investing in Palantir is not without its own risks and challenges. One potential concern for investors is the possibility for legal contingencies regarding privacy and data ownership. In other words, they could get sued. As a company that deals with sensitive and sometimes private information, Palantir may face regulatory scrutiny and legal challenges, which may adversely affect its operations and reputation. Any negative developments in that area may significantly impact investors' sentiment and the company's financial performance. Furthermore, its reliance on the public sector and the contracts that they have is also another risk. Government contracts can be very lucrative, that's for sure, but they can also come with a degree of uncertainty because they're subject to political and budgetary considerations. Government agencies may decide to cut back on spending, and that can have a detrimental effect on Palantir's revenue and its perceived value and growth prospects. This concentration on, on a single source would expose investors to additional risk and volatilities. Another potential downside is the possibility of a shift in the market narrative away from data analytics or artificial intelligence, just like the market has already shifted away from fintech and EVs. These technologies are currently in high demand in terms of the market is demanding a lot of these shares, but changes in actual policies and regulations may impact the perceived relevance and value of those new offerings. If the market begins to favor other sectors or other technologies, it could dampen investors' demand for Palantir shares. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Considering the current market dynamics and Palantir's own performance, I would say that buying Palantir shares is a good long-term investment decision that investors may have, seeking exposure to the tech sector in both AI and data analytics. Palantir demonstrated its own resilience in difficult times and indicated its stability and potential as a significant player in the industry. It has its feet on the ground and has enough imagination to think about the blue sky future that we should have. Palantir has also shown an ability to adapt and to capitalize on new market narratives, which is very crucial for a rapidly evolving landscape. Its capacity to seize opportunities may suggest that it can continue to thrive and to generate more value for investors in the years to come. But in the current time, we're talking about the relevance of a market entry point. And I would say that in this regard, because no one can predict the future for sure, I would say that it might be a smart move to start slowly accumulating Palantir shares over a prolonged period of time, such as more than 12 months. And from there, we shall see where does the market bring us. So, in the short term, I feel like the interest rate cuts or whenever that decision is going to finally come by the US Fed is going to be a major catalyst. Other than that, well, anything that happens within the AI sector, any new platform, any new product that Palantir may distribute or to disclose to the investors might be some additional catalysts. And in the meantime, we also have to see how much capital around the world wants to find a safe haven, because that safe haven is usually the American stock market. The final possible factor is to determine, or that we have to see, is whether the upcoming US election in 2024 will be something to destabilize market outlooks, or on the opposite, if it's something that's going to boost it. Now, this last element, in my opinion, is going to have a very significant effect in the short and medium run. And because of that, I would say that any sort of significant purchase of Palantir shares, it might be smart to leave them to be carried out after the elections.